2025's housing market isn't just cooling, it's cracking wide open. Some cities are staring down the barrel of serious collapse. If the turmoil reminds you of 2008, experts warn this could be even worse. What's driving prices off a cliff? Why are certain homeowners shelling out $10,000 a year for insurance? And which cities are teetering on the edge, where homes sit empty, foreclosures rise, and buyers have all but disappeared? From glitzy metros to sleepy suburbs, these markets are flashing unmistakable warning signs. Today, we're breaking down 10 U.S. cities where the housing market is unraveling in 2025. Number 10, Miami, Florida. On the surface, Miami still looks like a pastel dream. Art Deco facades, palm-lined beaches, and that glossy tropical allure. But behind the postcard image is a housing market on the verge of crisis. Since 2020, Miami home prices have skyrocketed nearly 70%, with the median now around $610,000. Yet the median household income is just $56,000, a staggering 11-to-1 price-to-income ratio, one of the worst in the country. The city is also ground zero for climate-related risk. Flood zones are expanding, hurricanes are intensifying, and insurance premiums have gone through the roof, averaging $8,000 per year, and that's if you can even get coverage. Some homeowners saw premiums double in just a year, as major insurers pulled out of Florida altogether. Inventory is surging up 42% year over year, and homes are sitting unsold for over 90 days. Foreign investment, once a driving force, is slowing sharply as Latin American economies struggle, Chinese capital flows shrink, and U.S. interest rates rise. Luxury rental vacancies are also creeping up, pushing rents down. Experts warn of a 15–20% price correction by year's end if rates stay above 6.5%. Miami's bubble is being held together by little more than duct tape and sunny optimism. And if it bursts, the fallout will be anything but subtle. Number 9, Las Vegas, Nevada. Las Vegas thrived during the pandemic migration wave, with prices soaring 58% in 5 years to a median of $450,000. But 2025 finds the market losing its momentum. Listings are up 33%, and over 40% of homes have seen price cuts. Investor demand has dried up, vacancy rates have climbed to 6.2%, and rental growth has stalled. The affordability gap is widening. The median household income of $64,000 can't comfortably support mortgage payments exceeding $2,500 a month at current rates, above 6.5%. Jobs in hospitality and tourism, key to Vegas, are still recovering, and water scarcity concerns, with Lake Mead at dangerous lows, are turning off potential buyers. Foreclosures are up 18% year over year, especially among buyers who purchased at peak prices with minimal down payments. Add in high HOA fees and maintenance costs, and many owners are opting to sell. The party isn't over yet, but the music is fading. Number 8, Detroit, Michigan. Detroit has fallen and risen before, but 2025 is testing its resilience. After a decade of downtown revitalization, the cracks are reappearing. Home prices have climbed 90% in 5 years, with the median now at $83,000, still low nationally, but increasingly out of reach for a city where over 30% live below the poverty line. Thousands of homes remain abandoned, infrastructure is aging, and property tax delinquency hovers around 15%, eroding homeowner equity. Detroit's economy remains tied to manufacturing, and recent slowdowns in auto production, fueled by supply chain issues and the EV transition, have driven unemployment to 7.9%, one of the highest among major metros. Inventory is up 35% year over year, with properties lingering unsold for months. The city has lost 1.2 million residents since 1950, and that population drain, coupled with urban sprawl, adds to maintenance costs and blight. If current economic pressures continue, some neighborhoods could see values fall 10 to 15% by early 2026. This won't be a sudden crash, but rather a slow, grinding deflation. Number 7, Phoenix, Arizona. Phoenix was a poster child for pandemic-era growth, with prices up 70% from 2019 to 2022. But by 2025, the median has slipped from $470,000 to $420,000, and analysts expect another 10 to 15% drop. Inventory is up 45%, and the average time on market has doubled to nearly 2 months. Monthly payments on a typical home now exceed $2,800, well beyond what many families earning the $72,000 median income can handle. Investors once bought nearly 30% of Phoenix homes, but short-term rental demand is down thanks to oversupply and new regulations. Climate stress is another blow. Over 50 days above 110-degree F were recorded in 2024, raising health concerns and energy costs. Foreclosures are up 21%, and with construction still booming, the oversupply problem is getting worse. Number 6, Atlanta, Georgia. From 2020 to 2022, Atlanta's home prices jumped 61% from $260,000 to $420,000. But with rates around 7%, the market is cooling rapidly. Inventory is up 34%, and affordability has tanked. Median income is $71,000, but mortgage payments on the average home exceed $2,800 per month, not counting insurance and taxes. Property tax hikes are making things worse. Investors who once made up 25% of buyers are now selling off as Airbnb demand weakens. Foreclosures are up 22%, especially in lower-income neighborhoods. Atlanta still remembers its 2008 collapse, and some fear history could repeat. Number 5, Deltona, Florida. Between 2019 and 2022, Deltona's median price shot up 76% to $370,000. But as a commuter town with few local jobs, it's now struggling. Inventory is up 41%, and nearly half of listings have been reduced. Foreclosures are up 19%, and insurance costs, averaging $5,500 a year, are hammering lower-income homeowners. Median income, $55. Investors are pulling back, and short-term rental profits are down. Number 4, Tampa, Florida. Tampa's median home price shot from $248,000 in 2019 to $430,000 in 2022, a 73% jump. Now prices are slipping 7 to 10% in many areas. Inventory is up 38%, but buyers are scarce. Mortgage rates near 6.8% push monthly payments beyond what many locals earning $62,000 can afford, eating up more than 45% of household income. The insurance crisis is severe. Premiums average over $6,000 a year, with some flood-zone properties far higher. Job sectors like tourism, healthcare, and construction are slowing, and investors are retreating. Number 3, New Orleans, Louisiana. Home prices rose 39% from 2020 to 2023, reaching $320,000, but are now slipping. Insurance is a huge problem. Flood coverage can run $3,000 to $5,000 a year, with total premiums hitting $9,000 plus. Infrastructure issues, failing water systems, pothole-ridden roads, frequent power outages add to the strain. Median household income is just $45,000, making the average $2,200 mortgage payment untenable for many. Foreclosures are up 24%, and population stagnation combined with rising crime is pushing buyers away. Without reform, the Big Easy could face a big bust. Number 2, Denver, Colorado. Denver's prices soared 59% from 2019 to 2022, peaking at $620,000. By 2025, they've slipped to $580,000 and could fall another 10 to 15% by 2026. Inventory is up 36%, and over half of listings have seen price cuts. Mortgage payments on the median home top $3,800 first month, but median income is just $85,000. Tech layoffs, rising homelessness, and oversupply from ongoing construction are compounding the slowdown. Foreclosures are up 21%, hitting first-time buyers hardest. Number 1, Cape Coral, Florida. Cape Coral's meteoric rise, 79% price growth from 2019 to 2022, has turned into a steep decline. Median prices have fallen from $430,000 to $390,000, with another 15 to 20% drop predicted in 2025. Inventory is up 48%, and over half of listings have been reduced. Insurance costs are crushing, $7,000 to $10,000 a year for many homes, plus high HOA fees. Median income is $61,000, but mortgage and insurance can swallow 60% of that. With a job market reliant on construction, real estate, and tourism, all slowing, unemployment has climbed to 5.6%. Foreclosures are up 29%, and some neighborhoods are littered with for sale signs. Without major changes, Cape Coral could see one of the sharpest busts since 2008. So there you have it. 10 U.S. cities where the housing market in 2025 isn't just cooling, it's cracking wide open. From Miami's luxury meltdown to Cape Coral's hurricane-sized insurance bills, these aren't just numbers on a chart. They're warning sirens for anyone thinking about buying, selling, or investing. The question now isn't if the pressure will break the market, but where it'll happen first. Which city do you think is next in line for trouble? Drop your thoughts in the comments, and don't forget, the housing story is still unfolding, and the next big shift could be just around the corner. Stay tuned, because in our next video, we're diving into the safest markets to ride out the storm.